Today, I'm in a bit of a different setting. I'm coming to you from the Maldives. We're doing a Q&A. I've got some of the most market relevant questions right now. A lot of people want to know if they should be buying the dip, getting a lot of questions about my top altcoins for this next period in the market. I've also got some questions that I'm going to answer from X as well. So if you're interested in my broader market thoughts, my market update, maybe some, candid takes or personal stuff related to the market, you've come to the right video because I'm going to be answering them all. So
we've just seen a pullback in the market this week. What's your read on what's happening?
Yeah, so Bitcoin started to stall. And a typical sign that market momentum is stalling is when you have positive headlines, but price isn't reacting to the headline. So what we saw was Bitcoin and Ethereum starting to cool off despite, really positive news coming out of the SEC, some positive news coming out from Goldman Sachs, adopting more crypto and stablecoins as well. So that was like the first sign that the market started to cool off. And then obviously over the past 48 hours, and maybe when you're watching this, it would probably just be one day later, the market might be slightly different, but obviously we are down from the local highs. And I think that's largely being triggered by the fact that there was a lot of sell interest and short interest in that 120K area on Bitcoin. That's a really strong resistance zone, a bit of a psychological resistance zone. And there just wasn't enough positive news. There wasn't enough marginal buying to send price higher. So then we got some tariff news and the market reacted to that and went lower. But I'm sure one of your questions soon is going to be about what happens next. And, I'll get into my thoughts as to why I wouldn't be too worried about this dip. And actually, I would probably view it as an opportunity. At least that's how I'm personally positioning myself.
I think people are still wondering about altcoin season, if it's ever going to happen. Is the fear justified that it's never going to happen?
I guess it depends on your definition of altcoin season. Like if you're looking at the altcoin outperformance versus Bitcoin over a 90-day period, which is a season, technically no, we didn't quite get into altcoin season territory last week and the week prior. However, if you looked at it from a 30-day rolling average, altcoins technically did hit the 75-point threshold, meaning that they were technically outperforming Bitcoin. So we already had a mini altcoin season. I assume when people say altcoin season, they're referring to that crazy blow off top on altcoins that we saw in the past. I think I've stated on the channel many times that it's probably not going to be the same. It's probably going to be more sector specific, pockets of outperformance based on the strong narratives that I'm sure we'll talk about later today when I'll talk about a few of the coins that I would be looking at accumulating. But to give them an answer on the timeline, I've been resolute on this since the beginning of the year. And even in my video a couple of days ago, I'm not expecting a market peak until the seasonally strong period in the market. And that is Q4 to Q1. I can't tell you exactly when. I don't have a crystal ball, but what I do know is that seasonality is definitely in our favor from the month of October this year to March next year. And obviously that an altcoin season or an altcoin run would be triggered by Bitcoin breaking to new highs and then seeing that liquidity rotate down from Bitcoin into Ethereum, into majors, and then into mid to low cap alts. Obviously there are many more altcoins than there were, in 2021. So the pump across each individual alt won't be as great. There are many dead altcoins in the market. However, the pump still will be pretty massive for the coins that have strong narrative alignment and strong trend alignment. That's why I always recommend that people actually chart altcoins versus Bitcoin and Ethereum to make sure they're outperforming the major indexes in the market. Because if you can't perform Bitcoin or Ethereum, you may as well just hold Bitcoin and Ethereum, right?
Yeah, it's a good point. What does a smart retail investor do in a period like this? Is it time to risk off or dial it in? Risk on.
It's funny. There's like an interesting juxtaposition at the moment. This is the period to take on the most amount of risk because we do know that the biggest gains happen in the last period of the cycle. So 80% of the biggest gains happen in the last 20% of the cycle. So it's the time to take on the most risk, but it's not the time to have the most capital deployed. And this is where I think some people get confused. They assume because this is the blow off period in the market that they should be deploying all their capital to maximize it. But actually the best way to approach it from a risk reward perspective is be in riskier instruments, but put less capital into those instruments and hold more cash or more safer assets to contrast against that. So what do I mean? You should be dialing up the risk as the cycle end gets closer and closer and closer in terms of going down the risk curve in alts, but the amount you allocate to those altcoins should actually be less than in the beginning of the cycle. So last year, for example, in a bear market like 2023, you wanted to hold a lot, like 90 to 100%, like start allocating a lot of capital towards Bitcoin. So you're putting a lot of capital into a safer asset. Whereas at the end of the cycle, you want to put less capital, so maybe 20, 30% into altcoins, but obviously riskier plays than Bitcoin. So at the the end of a cycle, you want to dial up the risk, lower the amounts that you're actually staking, because this protects you against downside in the event that you don't time the market correctly, but it still gives you exposure to the upside of the market if things really go crazy. So I wouldn't recommend anyone is all in, in the late stage period of a cycle in terms of capital deployed, but I would, and this is what I'm personally doing, so I'm preaching what I am doing, look at moving down the risk curve to try and capture some of that high beta exposure upside to Ethereum's rally especially.
Okay, yeah, you kind of answered my follow-up question, I suppose. Like, what does positioning properly actually look like? Is it stable coins? Is it rotation plays? What's your mindset?
You should have a long-term portfolio, right? But your long-term portfolio should only consist of assets that you genuinely think will be around next cycle, like Bitcoin, Ethereum, Solana, maybe have an L1 bet in there like Sui, maybe have an RWA or a DeFi play like Hyperliquid, Avalanche. These kind of things, I think you can hold long-term. Just accept the fact that in a bear market, they're going to draw down massively. So even on your long-term holdings, at the peak of the market, at the peak of euphoria, you still probably want to look at taking some profits off the table so you have money to reinvest into those assets long-term. So that is your long-term portfolio. Now, the other thing you should have is an active portfolio. This is your trading portfolio or your, let's say, 3 to 6 month portfolio that you'll use to maximize the bull market. This is a different portfolio because this will be more centered around hot narratives at the time, hot sectors at the time based on relative strength, but you're under no illusions that those coins you're not necessarily holding long term. So if I get into an AI agent play, it's fine for 3 months, I can make a lot of money, but I want to be rotating back out into stablecoins or Bitcoin, something for my longer term portfolio, so I'm not round tripping those gains. What I would recommend, and this is where people get mixed up, they like mesh their portfolio together, long term and short term. You should have 2 separate portfolios, a long-term portfolio which you manage separately to your short to mid-term portfolio that you're using to maximize the rest of the bull run. And I do the same thing. Like I have Bitcoin, Ethereum exposure that I'm holding over multi-years. I'll still take profits at the peak of the market, but my goal is to accumulate more over time because I think they'll do well long-term. Same for Solana. I'm even considering maybe putting Sui in that bracket now. Hyperliquid could potentially be in that bracket now. And there are some other lower cap coins as well, which I think are worth holding long-term, but you can't just hold a bloated portfolio of 30 coins long-term. You can hold 30 coins for the last bit of the cycle. You can't hold that long-term. So that's why I recommend actually differentiating long-term versus short-term coins. And then that way you're not bag holding. You're not convincing yourself that an altcoin's like the future of crypto when, in reality, it's just riding off narrative momentum. You should be able to take advantage of narrative momentum whilst building a solid portfolio long-term and using that momentum to increase your principal Bitcoin holdings.
Yeah, kind of mental model you have in breaking up your portfolio.
With the trading part of my portfolio, I'm trying to make sure at any given moment in time, I'm in an asset with relative strength, meaning it's outperforming Bitcoin, Ethereum, and its counterparties. Now, you're not going to be able to be in the strongest asset every single day, but I'm looking over like a 90-day period. Am I in an asset that's in an uptrend versus Ethereum? I mean, right now, some of the meme coins like PENGU, SPX, they're actually in uptrends versus Ethereum. ENA, it's an ETH beta, it's in an uptrend versus Ethereum. These look substantially better than other assets in the market, and Tau is a coin that, I actually hold long term, but it's not part of my short-term trading right now. Why? Because it's making lower lows versus Ethereum. And it's not until it starts to reverse and show signs of strength that I would consider trading that in the shorter term, even though I like the idea of holding it longer term. So see how I'm making that differentiation there between long-term and short-term relative strength plays.
What mistakes are you seeing retail make right now?
The big mistake is that people, and this goes back to what I was saying earlier, are now starting to take on more risk in terms of exposure to the market. But actually right now you should have less stablecoin liquidity exposure to the market. You should be in higher risk assets as I discussed before. So what I'm seeing, and this is really dumb, as Bitcoin and Ethereum were into resistance, Ethereum was literally into 4K resistance, Bitcoin was literally into 120K resistance, they started to then deploy new capital. It's like, no, you've got to deploy on big dips, and actually now we're getting a dip. So this is when I'll be deploying. And actually, even if you've been watching any of my content over the last couple of weeks, I've said that as the market heads into resistance, you shouldn't buy. And as on major fear, like dips, that's when you should be buying. So I think the big issue with people is that they get really excited into resistance and they start allocating more capital and getting riskier and riskier and riskier as prices are going up, whereas they should actually be doing the opposite in the market. And that's why it really became apparent over the last 48 hours as the market has dipped a little bit, because people are freaking out. Would you be freaking out if you were underexposed? No. So it's a clear sign people are overexposed to the market. So you have to be very careful with not just what coins you enter, but when you enter them.
What signs do you look for that we're entering real momentum again? Have you seen any of these signs?
The number one signs I'm looking for is others BTC, ETHBTC. And ETHBTC made a reversal. Now, in the short term, I think it goes lower. I think dominance goes up a little bit in the shorter term. But from a macro perspective, that trend shift has already happened. And I expect ETHBTC has actually put in its lows for the cycle. So the number one trend shift for the market is ETH outperforming Bitcoin. Now, this can take months to play out, but that is the number one thing that you're waiting for altcoins to actually perform well. And that has already started to happen. So the shift has already begun to happen. The big run for altcoins, though, will not happen until ETH breaks all-time high. And that's 4,500. Obviously, they'll do well in the lead up, but it's really only once ETH hits price discovery, just like Bitcoin hit price discovery, that, you really see that full rotation in full effect. So we've already started to see the beginning of it, but we haven't seen that full breakout that would trigger a bigger altcoin run. People just need to be patient and accept that, the market is going to follow Ethereum's lead. So just all eyes on Ethereum, really, if you're trading alts.
Yeah, you said before maybe that the bull runs make you rich, but they also test your discipline. How do you stay level-headed when things are pumping, dumping, or like this?
Yeah, I think the way to stay disciplined is in risk management. And this is something people get wrong as well. Like, you need to have invalidations for your trades. Like, any new trade that I'm taking right now, I have a technical level or a fundamental invalidation where if it drops below that level over a certain time frame, or, I see bad price action under a certain level, I'm willing to cut. So I think in order to protect against the mental side of things, I just frame trades in terms of risk reward. So if I put $10,000 into a coin and my maximum drawdown is $2,000 and my stop loss or my exit clause would happen around $8,000 worth of my position, then it's fine. Then I've already baked into my head that, okay, if I'm wrong, I lose $2,000, that's fine. Most people don't set floors for themselves. So they'll buy a coin, since they don't have an invalidation, they'll see it go down from 10K to 9K, 8K, 7K, 5K, 4K, then start freaking out when they already should have invalidated like well before then. So I think the number one way to actually manage emotions in the market is to A, have invalidation so you know what your max drawdown is, B, take profits as prices are going up to make sure you have stable coins, and C, exactly that. Make sure you have stable coins on the side, because even in the euphoric periods of the market that are yet to come, you will have big dips. You will see 30% dips in the market where you'll wish, even at the peak, you had more money in order to cycle into new trades. So it's never a bad time to hold stables. Right now, I'm honestly around 50% stables. At times, maybe towards the end of the cycle, I'll go down to 30, but only very, very short term. I'll aim to bump back up to 50 at certain points. Now, that's not necessarily applicable advice to everyone. If you're in a different position and you're trading with a smaller portfolio, I totally understand why you might want to be 70 to 80% invested, but anything less than 20% cash, in my opinion, is a suicide mission in crypto, because you absolutely need liquidity to take advantage of opportunities, even if you want to maintain exposure to the market. You always need liquidity, because even at the peak of a market, you'll have these violent swings, and these liquidation wicks are always huge advantages, even on leverage, to actually scale into positions and make short-term money. Like with WIF in 2024, I remember printing a lot of money on a trade where I just set limit orders on WIF. It wicked overnight, it instantly bounced because we're in really bullish conditions, and I made a lot of money off that trade. If I was 100% invested, how would I have any liquidity to have limit orders on that trade and make that trade? I wouldn't, right? So even at the peak of a bull, you still need stable coins. This is not just a bear market thing. You always need stables. Now, I might hold more stables than the average person. That's just because I'm in a different situation and I'm in a different risk period in my portfolio. That's fine. Everyone's got to define the level for themselves, but just please make sure it's not under 20%. That's just the only thing I'd say.
So I think that begs the next question about portfolio sizes, like 5K, 10K, 50K. Right now, how would you personally split rough numbers across different asset types you crypto or strategies?
I can only really speak to what I do, and I think it doesn't really matter whether it's 50 or 100K. I think, it's the same logic, because it's all based on percentages, right? Half long-term, half short-term in terms of my crypto portfolio. And then half that will be cash, and then half that will be crypto. So in reality, stables versus crypto, you're 25% long-term, 25% short-term, 50% cash. That's what I'm personally doing. As I said, people can dial up the risk a little bit and maybe hold a bit less stables if they're a bit less conservative than me in terms of their approach to the market. But in terms of, obviously, if you're investing 5, 10K and your goal is to get to 100K, you're going to need to take on more risk than the guy with 50K trying to get to 100K. So I think the first thing you got to set are your goals, because if you really want to 10X in the market, you're accepting you're almost going to have to be willing to ride your capital base to zero in order to chase that if you only have 5, 10K in the market. Whereas if you're the person that has 50K and you want to make 100, you can obviously be in much safer vehicles. So you kind of have to reverse engineer, what's my actual realistic goal? How much money do I have? And how would I play that? But then don't ignore the signs from the market chasing a target, because what I did last cycle was I had this target in my portfolio where if I hit it, or if Bitcoin hit this level, then I would sell. And I got the majority of the way there. I got 70, 80% of the way there. And then because I didn't hit that final 20%, I ignored signs from the market and didn't invalidate. So for example, if you have 10K and your goal is to get 50K and you're at 40, but it's at 40 when Bitcoin starts to break down and you're seeing reversal signs or seeing top signals, be okay ending the cycle a little bit behind where you want to be. It's better to protect capital and still have a large base to go again next cycle than, trying to chase that extra 10K and then burning your whole portfolio, trying to squeeze out that, little bit more juice out of the lemon. It's not a good idea. And I think that's also a problem. The market doesn't care about your arbitrary price targets. If your portfolio is 90 to 95K, does the market care? No, the market doesn't know that. The market's going to do what the market does. So don't ignore the market signs just because you haven't hit your goal yet. The reason I know the advice is because I've been through it. I've round tripped a lot of money in the market and I understand what it's like to chase a target and be almost there and then greedily chase it. I even did it last November with a coin. Thought I was going to make 10 million off, hit 1.8 million. Started to see some negative signs, ignored them because I was chasing this arbitrary number. Market didn't care about my number. Market just cared about the fundamentals.
What are you watching closely?
So hottest verticals for the trading part of your portfolio for the next period in the cycle. ETH betas, I think these are going to do really well. ENA is a top one. DeFi plays that are also doing well. Fluid, I think, is quite undervalued based on the revenue that it's generating. So these kind of DeFi plays, stablecoin protocols. I'm just giving you some examples, right? You don't need to buy these coins, just giving you some examples of coins in these niches. So for stablecoins, Cpool recently released a PayFi product. ASF is a slightly riskier bet. Syrup as well as an RWA crossover. These are all sort of plays. I've got my eye on the AI coins. I still think AI agents could run, but obviously right now you've got to be careful with the positioning due to relative strength. In terms of coins that are showing relative strength alongside ETH betas, you're seeing reflexive coins doing quite well, like these brand coins that also have like these buybacks. I mean, there are coins like SPX, PENGU, which are reflexive to market sentiment due to their large communities and being meme coins. Coins like Useless as well. It's kind of like going on a hated rally that's showing relative strength. So yeah, reflexive coins, meme coins, DeFi. AI at some point I think is going to do well, but it's not doing well yet, so there's no real rush to position in that. RWA, stablecoins, these are the types of narrative I think will really outperform, but I'm open to a new thing coming along. If Trump says something and it becomes a meme and that becomes a narrative, you got to be open to going where the attention is because liquidity flows where attention goes. So I want to be open to trading on attention. That's all crypto is. You're just trading attention and trading mindshare. And when mindshare shifts, so will liquidity.
How do you make money trading stables? Aren't they just like trading capital?
Oh, no. Stablecoin proxies. So basically, obviously you can't make money investing in USDC or USDT. It's actually a good question because I think some people actually do get confused. What's happening right now is there's a big stablecoin narrative that's occurring. So obviously the proliferation of USD1, Trump administration's new stablecoin that they're supporting, the sheer growth of USDT, USDC, positive stablecoin regulation via the Genius bill in the US, all of this have created really positive conditions for stablecoin growth, which is, obviously part of Trump's agenda is to strengthen the US dollar. So he wants, to actually facilitate stablecoins. So I'm looking at proxies, crypto plays that are narratively aligned with the growth of stablecoins. So Plasma, the chain that's launching it, is Tether's chain. If that's at a reasonable valuation, I would love to trade that. But beyond that, there aren't that many. So I'm looking at other niche solutions to try and get exposure to the upside. And a couple of the coins I mentioned before fit that bill. Just keep in mind, they're not guaranteed to go up just because stablecoins grow, but at least there's a strong narrative there, given the fact that stablecoins are one of the only sectors in crypto to find genuine product market fit.
Interesting. Yeah, interesting. Okay, so how many years ago did you start crypto? Was it 3-4 years ago?
No, longer than that. I mean, look, technically, I started researching crypto in 2017. I was interested in Bitcoin mining in 2013, but the date that I use when I refer to this is when I first bought my first whole Bitcoin. That was 2019. So technically almost 6 years now, coming up on 6 years of actively being in the space. Because before then I wasn't active, so I can't really claim to be class of 2013. More 2019 was when I really got busy. 2020 was my busiest year in the market. And then obviously the last 5 years have been much more intense, since going full time. By the way, if you guys do want to see behind the scenes of this, we've been vlogging the whole week. So I'll leave a link in the description below to my vlog channel. Make sure you subscribe because I'm doing weekly vlogs. We're filming behind the scenes of my life. We're filming the raw reality of my life, the ups, the downs, the meetings, behind the scenes of filming the videos. I drop some additional alpha. So if you do want to see not only this week, but also other behind the scenes stuff, I'll leave a link in the description below. Really focusing on that channel because it's just a new medium for me to actually share raw, authentic, parts of me that aren't just crypto, because there's a lot more that went into building up my knowledge base in crypto.
Yeah, this guy, he can't even have dinner without sending a voice memo or looking at charts. We were charting one night at dinner. So yeah, it's pretty cool insight.
Yeah, I mean, maybe I work too much, but now's the time. If you're gonna sacrifice, now's the age, the period. the growth of one of the biggest industries of all time in crypto, AI now, just such huge opportunities. If you're not giving it all, I mean, now I don't know when you would. Now's the time. And I love it. I love the game. If I didn't love the game, I couldn't sit at dinner and, you know, send voice memos and trade and chart. If I didn't like it, so I genuinely like it. I get dopamine from it.
Yeah. What do you understand now that you wish you knew the 2019 miles?
Oh, take profits. It's got to be the number one. I mean, a lot of the things that I learned, like, reflect in my content now. Like, I wouldn't be preaching invalidations if I didn't lose money from not having validations. I wouldn't be preaching take profits if I didn't lose money from not taking profits. When things go up, take profits, hold stable coins. I've actually got some, I'll summarize this into some very good advice. I'll look into the camera for this. When trying to protect your money, act fast. And in the pursuit of making more money, act slow. Most people do the opposite. People are so eager to make money, so they'll risk money really quickly. But when it comes to protecting money, people act slowly. But in reality, to make money in crypto, you need to survive. To make money in any market, you need to survive. So you should reframe your thinking. Your number one goal is not making money. Your number one goal is survival. And as a byproduct of survival, you'll end up making money. So that's why I'm saying, if you want to protect money, do it fast. If you see bad signs in the market, take money off the table fast. If there's a breakdown, take money fast. Don't be complacent. My biggest killer, because you asked me about my lesson, has been complacency. It's been when I've had opportunities to take profits and I haven't taken it. I've been too slow to preserve or protect capital. So be fast to protect money, be slow to try and make money. And when I say slow, and when I say be slow to try and make money, I'm not saying, like, you know, don't take opportunities if they're there. What it means is that impulse to, like, buy as soon as you see a bit of confirmation bias. Just try and check yourself a little bit. So don't open the trade straight away unless you're a news trader. Think a little bit about it, come up with a plan, take an extra hour or two. Rarely does price run away from you in an hour unless you're a, you know, low time frame scalper. And make sure the stars really align on that trade and you're really entering it for the right reasons. And then you can enter. I'm just saying, act a little bit slower. That impulse to, like, ape, just slow it down a little and increase the impulse to de-risk at the right moments. I'm not saying panic sell, but if signs are genuinely going against you, you can always get back into the market. But once you lose money, it's lost forever. So that's why, you know, I say the saying. I think I've forgotten the author of the saying. It's something Williams. I think Larry Williams. It's from a book in the 60s, but it's a good saying. Oh, I'm going to answer some rapid fires after your last question as well. I asked Twitter for some questions, or X now, and I got some good ones. I'll do a rapid fire after this question.
What would you tell the 2021 version of yourself if he was sitting here in the Maldives right now checking his portfolios?
I'd say, don't be afraid. And this is with hindsight bias, but I think it's general. I think this applies for many decades to come, probably. Don't be afraid to take big risk when the stars align. Back your gut with conviction. Try and do so during moments of fear and not moments of euphoria. Be very wary of moments of euphoria. Make sure to focus on counter trading market sentiment, and also think longer term. Try and think longer term with all your investments. Be open to short-term trading, but really try and understand where things are going long-term, because I think often the biggest opportunities are actually long-term and not short-term. And there's been times in the past where I was very short-sighted, and that has impacted me, across multiple fronts. And I'm a bit impulsive, but try and think longer term. Try and be fast with your decision making, but understand when to take on risk and when to risk off. Just be a bit more level-headed. And I think honestly charting is a great way to do that. I should have learned TA a lot earlier. I would have said learn charting, learn invalidations, because now I've become a better chartist. I've really focused on that over the past 2 years. Even my fundamental entries are better. So now when I have a fundamental coin I like, I look for fundamental and narrative alignment, and then I go into the charts for the entry. And that system is 10 times better than whatever system I was running in 2021. So yeah, I think that's the general advice. There's lots of life stuff. We're not going deep into life. On this channel, we do on the vlog channel. Make sure you subscribe. This is more crypto focused advice. I wouldn't want to tell them too much, because I think a lot of the learnings I've had through losing a bunch of money and making a bunch of mistakes have created my character today and helped me learn a lot today. So as the storm starts to pass, I wouldn't tell him too much, but I would just give him those pointers. I mean, maybe I'm naive now, and in 5 years I'm going to be like, 24-year Miles was naive too. Yeah. All right, rapid fire. Let's do rapid fire quickly. Whoa, the wind's going to blow my socks off here. All right, or my hat off. All right, how to fight FOMO, already talked about it. Fight FOMO through, I guess, waiting for dips and using technicals in trading. But I would just say always, wow, my hat's going to blow off. Always buy dips. Always buy dips. Favorite Central C song? I love the song. I think it's CRG. Maybe I'm getting that wrong, with Dave on his new album. Great song. Weird question, but great song. It's too windy out here. How do you not give up when you're not seeing results? Yeah, just focus on the process, learn to enjoy the day to day, and try and like set small targets. Doesn't always need to be big. I mean, even with growing my X, this is not money related. You know, my target was just to get 10K and then 20 and then 100, and then I had a guy I wanted to beat with a couple hundred and I flipped him, and just small targets, and they stack. And then what you'll notice is you'll look back like 5 years later and be like, wow, I've come a long way, and it was just step by step by step instead of trying to have this outlandish target. For example, if you have a 10K portfolio, just try and get to 20. You don't need to aim for 100 because you can keep compounding. Compounding is the most powerful tool in finance as well. How do you know when to exit a position? Usually it'll be laddering. I don't usually exit all at once unless there's either an invalidation or something fundamentally I don't like. I am more ruthless now than ever, not with my long-term portfolio, but with my short-term portfolio. I have a very high propensity to cut. So if there's something I don't like, something the team does, something off, if the price action's off, I'll just cut. I'm much more ruthless in my short-term trading than I used to be. Ruthlessness in the markets, especially for invalidating, is very important. What's the one thing you most regret in life? I think going back before, I don't really have major regrets. I have a series of minor regrets, but then again, I think I learned a lot through them. Look, I have some, I don't know how minor it is, but I really messed up Q4 last year in terms of my own positioning. I didn't do a great job. I regret some stuff like on the social media front, like with the way I used to speak about projects and probably my lack of risk management and that sort of stuff. Like back, especially in the early days, I didn't really understand the creator game very well. Now I'm a lot more like, you know, level-headed and just, I think, yeah, I just present a lot better. And I've made mistakes on that front, made mistakes with projects, made many mistakes. I'll probably continue to make mistakes, but I wouldn't, regret's a very strong word I don't really want to use. But, you know, learnings, I would say learnings. Number one pick for the rest of 2025. That's a great question if you've stuck around for it. I'll look through my list now. Honestly, I don't know if I have one number one pick, but I think the series of coins that I discussed earlier, I'm going into my notes here on my phone. The coins with relative strength are generally very good. I think PENGU, SPX, Useless, and REKT, they're kind of the 4 meme coin quartet. I think they'll do quite well. And then on the DeFi side, I'd say Fluid and ENA are pretty good, but they're, you know, these aren't 10 to 20x moonshots, but I can't give you 10x moonshots with confidence because otherwise they wouldn't be 10x moonshots, right? Anything else? What's your most contrarian take right now? My most contrarian take. Okay, I have one. Everyone thinks we're going to peak in Q4 this year. I actually think we might peak in 2026. This is a bit of a contrarian take. I actually said this earlier in the year, so I've been of this opinion for a while, that we'd see a peak this year, then we would see a lull, a mini bear market, and then we'd have a second big explosion in 2026 as we head towards quantitative easing and that narrative hypes up. But a lot of people are going to think the bull market's over because the market will crash in between. So yeah, that's basically all of the questions. Thanks for watching. Subscribe to the channel for more content like this. If you want to see more behind the scenes, subscribe to the vlog channel, link in the description below, behind the scenes channel, and I'll see you in the next one. Hopefully you enjoyed, guys. Peace out.